kick off the show this afternoon. So, Anil, I want to ask you about GameStop, but some folks did ask Mr. Jay Powell, and of course, all this is just hard to fit together. So where do you start when you think about policy right now and what really matters to the economy?
Well, I think Powell hit the nail on the head, right? Which is that, and you mentioned this in your opening, that basically it's vaccines, right? And vaccines are accelerating. You're getting more shots into the arms. At the same time, the trend in COVID cases appears to be going in the right direction, and you're seeing hospitalizations come down. That's driving, I think, more states to reopen their economies. And that's going to be helpful to the economy. More generally, I mean, you look at the last jobs number, most of the weakness was in leisure and hospitality, as they noted. And I got to tell you, I mean, I think those jobs can come back relatively quickly. I mean, to me, the distribution of job losses right now makes it, very difficult to sort of buy into the structural economic weakness. This is not the same thing as 2008 when you had job losses casting a really, really wide net, Oliver. Now it seems to be much more localized. And you look at other indicators. I mean, temporary help employment continues to improve. Obviously, things like the manufacturing side of the economy, housing continues to do well. I just can't get that worried about consumer spending if home sales are surging, So it's sort of strange credulity to think so. So, I think, we had like few weeks there. I mean, maybe the last week, 3 to 4 weeks to kind of soften the economy. But, my sense is that February will be off to the races.
Neil, should we be concerned about these kind of week-to-week misses on some of the data, the reminders that things aren't perfect out there? Or should investors be focusing on the trend? Is there potential that our trend of recovery gets derailed in a big enough way to create like a double-dip recession? Or should that be ascribed a very small probability in investors' minds right now?
No, you shouldn't be thinking about double-dip recession. You should be thinking about the right tail scenario. That's what you should be thinking about. In other words, where's the consensus and what are the upside risks? You shouldn't be thinking about downside risk right now. The Fed and the consensus, I thought it was interesting the Fed is talking about how the economy is moderating at a time when the IMF just revised up growth expectations for the U.S. and the world, frankly. But, that just sort of tells you what's going on here. I mean, it's a bit of expectations management going on, but I also think it's not the time to be thinking about downside risks. Number one, the economy's already been doing better than people have anticipated. Number two, you've already had a V-shaped recovery in about 40% of the economy, whether that's residential investment, durable goods spending, business equipment spending, beyond that, once the vaccine is made widely available, you're going to get a delayed recovery in all these service sector services. I mean, things like, going to the movies, or going out to eat. All those things will start coming back on over the summer. So that, on top of the fact that we just did, 15% fiscal stimulus, maybe even more, given what they're talking about right now, layered on top of the fact that the economy is only about 4% below its pre-pandemic peak. I mean, we've seen a fiscal response relative to output gap that we've never seen before in the country's history. If they got Biden's $1.9 trillion plan through, and I'm skeptical that they would, because the economy is getting better, the economy wouldn't be able to produce all that in 1 year. So you kind of almost have to hope that some of it's saved, right? So I think for investors, we need to be thinking about what are the right tail scenarios. Because my sense is that 5% is still, for this growth this year, is too low. I mean, we're already doing like 7.5% sequentially with the pandemic raging. So what's special about 5? It's like a chicken forecast. I mean, be a little bit bolder, I think. I mean, if you're in the business of market economics, not sort of risk management or policy economics, but I think if you're trying to make investors sort of make sense of this world, the risks are far more skewed to the upside. And thinking about downside risk, I think, is a waste of time.
Okay, so thinking about the right tail risks of growth being bigger than expected, more powerful than expected. Neil, I described at the top of the show reaching inflation at some point of the Fed's inflation targets as an inevitability. Is that too subjective, or can we conclude that if we got it before COVID and now we've got incomes and savings already even higher despite a pandemic and that we're going to shoot more in, how is it not an inevitability that we get back to their target? Isn't it just a question of when? Am I wrong?
I mean, I think for this year, I think inflation is getting to their target, I think, is a bit of a stretch. Remember, a lot of the increase in inflation that we've seen thus far, the upside surprises of inflation, has really been on the good side. Things like vehicles and appliances and furniture and stuff like that. They're sort of durable goods. And a lot of the reason why the prices for those things have been going up is because people have still been buying them, but producers haven't been able to make them, for COVID, because of COVID. I mean, they haven't been able to get people to man the assembly lines and things like that. That's led to increases in delivery times, which has put upward pressure on prices for these goods. As COVID goes away, the delivery times for these things will come down, and prices will begin to moderate for those things. Inventories will start to come up, right? At the same time, shelter costs are quite benign. I mean, when you sign someone up for a new lease, I mean, you're not doing it for a month, usually. I mean, it's for a year or two. So that those sticky prices have already moderated. So it's hard to see a meaningful pickup in inflation right now. I mean, certainly I could make an argument for, skyrocketing price growth in, hotels or airfares. I mean, the demand is going to be insatiable, I think, in the summer and the fall, because a lot of people are going to be vaccinated. They want to go out and just release a little. But beyond that, that's not really inflation. That's pockets of price pressure, but that's not a general rise in prices. Looking beyond that, I mean, you can make a case for more widespread price increases in 2022. I mean, presumably by then the labor market will be in a much better place. There'll be less slack, and you'll see presumably a lower savings rate. So maybe there's more consumption power coming. I don't think it's really a story for this for now, but I think it could be one down the line. And I agree with you. I mean, between what we're doing, I mean, if we don't get inflation now, I mean, we probably don't really understand how we're ever going to get it.
Neil, on the separate point, in terms of one of the main strong areas of the economy right now, housing. I just want to come back, as you mentioned, housing. You heard from Michael Shaul last week that this is potentially just heating up, that this cycle still has a long ways to go for housing. Do you ascribe to that same optimism that the pace of gains in the housing market can continue?
No, I mean, you've had me on the show for years, Oliver. I think that. I've been saying it. I mean, single-family residential real estate has room to grow simply because we've been underbuilding homes for so many years. I mean, we've been in an excess demand situation on the housing market for years. And what's going on now is that, builders are getting more aggressive in terms of acquiring land. I mean, that's been one of the big problems the builders have been citing all these years, is that, we don't have enough land to build on. Now they're getting more aggressive in, acquiring land. And at the same time, given how strong the demand is, I mean, prices in the resale market are surging. So I think home builders actually have a unique opportunity here to kind of gain share in the market, given the sort of tight inventory situation in the resale market. And, they'll probably build smaller homes, build out new communities. And I think that's just another reason to be sort of bullish on home builders.